Good morning, ladies and gentlemen, and welcome to this presentation of Finmeccanica's full year 2015 results. I'm Raffaella Luglini, Head of Investor Relations and SRI. We are very pleased to welcome you to Milan today. And it was also great to see many of you yesterday at our first One Company site visit at our facility in Vergiate. We hope you enjoyed the day and found it very helpful and informative. For the presentation today, I'm pleased to introduce you to our CEO and General Manager, Mauro Moretti. He will begin the results presentation and highlight the key points that show our important recent strategic progress. Then our CFO, Giampiero Cutillo, will take you through the full year 2015 results, as well as presenting our guidance for 2016. Our CEO will then review in more detail how we have been executing and delivering our industrial plan. We will then welcome your questions. I will now hand you over to our CEO.
Thank you, Raffaella. Good morning, ladies and gentlemen. Welcome in this incredible, fantastic Science and Technology Museum devoted to Leonardo da Vinci. Maybe you know because we have chosen this site to present our achievements. You know, 2015 was a turning point for Finmeccanica, on strategy, on organization, and on financial results. And these results reflect another strong year of delivery. At the top end of our expectation and above our guidance, with significant improvements in profit, cash flow generation, and debt. Giampiero will take you through figures and details immediately after. The results are a return of the actions we have taken. We are delivering on the promise we have made, executing strategic change, improving industrial processes, and optimizing costs. And with the One Company now in place, we will be able to deliver improvement in the year ahead. The ongoing progress on these challenging objectives that we set ourselves give us confidence as we enter in 2016, delivering another year of improvement in profitability and cash flow generation, and continuing to drive the strategy that is developing stronger company, creating value for shareholders. On top priority has been executing the industrial plan we announced in the early 2015. So, how are we delivering on the promises we have made to you 12 months ago? Starting with the strategic changes that underpin a higher quality businesses, we have executed the disposal to make this a pure high-space defense and security company. And we have changed significantly from a diversified company to a more focused and balanced business portfolio, sustainable into the future, with all our businesses now contributing to profitability and cash generation. We are being much more selective in the order we undertake to avoid losses. And we have improved industrial processes, optimizing costs, which makes us more focused and stronger. We have become more integrated and customer-oriented thanks to the One Company, which is not only an organizational and governance model, but above all, a deeply different business model, a different industrial culture. And these strategic changes are further supported by new and robust industrial processes to drive profit and cash. We have driven an important improvement in profitability, and it comes from our initiatives in engineering, supply chain procurement, and manufacturing. Together with the material reduction in below-the-line volatility, we are now seeing this progress reflected in net profit growth and improving leverage ratios. The net debt has significantly reduced and the equity increased, and the result is a debt to equity now at 0.76. We have streamlined our invested capital through a more rigorous approach to CapEx, capitalized R&D, and working capital management, but still investing for the future. And this is fueling improved free operating cash flow generation and the reduction in net debt. The 3 billion target is now expected not for the 2017, but for this year, 2016. I will give you more details on this later. First, Giampiero will take you through the results and figures in detail. Please, Giampiero.
Thank you, Mauro, and good morning, everyone. As you have heard, and consistent with the guidelines of our industrial plan, 2015 was a turning point for Finmeccanica, with a real industrial turnaround based on great focus on key industrial processes as the core levers of our performance. Strong and reliable delivery on what we promised. That's leading to a much different group in terms of increased productivity and profitability, better cash flow generation, and visible improvements in the balance sheet, with solid foundation on which to carry our progress also in 2016 and onwards. Today, I want to go with you through our overall performance in 2015 and our expectation for next year. I will run through the progress of our operating businesses and how they have contributed to this performance. You will see then how we are progressing on the actions on investment, on operating working capital. And then I'll show how the momentum we are achieving is reflected in our full year guidance for 2016. So starting with the full year 2015 results highlights. We have delivered strongly as a group, and we are satisfied with the improved set of numbers. We achieved a good commercial performance despite tough market condition in some areas, maintaining an order intake of over 12 billion euros, also thanks to the positive Forex impact. Revenues were slightly higher at just under 13 billion, with the biggest change due to still Forex impact. But we achieved a material step up in profitability, with an EBITDA at 1.9 billion and its margin at 14.4%, which is more than 200 basis points higher than last year. EBITDA was up 23% year on year, and it's now above 1.2 billion euros. And the return on sales is 160 basis points higher at 9.3%. So it's a clear positive trend, mainly driven by some really great progress in defense electronics and security, as well as by the reliable and robust margin in helicopters. And then we have also confirmed the descending trend on the below-the-line items, with much higher net profit before extraordinary transactions. And we also made significant progress on the cash side, with a free operating cash flow at 307 million compared to only 65 last year, and an improved cash conversion. So overall, a very good progress in 2015, and we are pleased with the direction of travel and with the speed of travel. We are carrying that momentum into 2016, which give us confidence looking forward, even in the medium terms. Let me show you how the operating business has driven this performance, starting with orders. Key points here are the overall order intake is maintained in the range above 12 billion euros level, in line with our guidance last year, but also thanks to the positive effect coming from the euro-dollar and euro-sterling exchange rates. Looking at the business, defense, electronics, and security had a very good commercial performance, I would say extraordinary, driven by some major contract in Selex and a more positive US environment for DRS. That makes the sector a much stronger contributor to the overall order intake. Then both helicopters and aeronautics had to deal with some market challenges. Orders in helicopters were down year on year, mainly due to a more challenging market condition in the oil and gas segment. But the order backlog of almost 12 billion remains strong and well diversified, ensuring almost 3 years of equivalent production. At aeronautics, new order intakes was lower at 1.7 billion, mainly because of postponements in the military aircraft business, both export and domestic. Nonetheless, thanks to the good coverage assured by our backlog, this temporary drop did not impact the 2015 revenues figures and is not going to impact the 2016 revenue across all the business, including helicopters. Moving to touch briefly on revenue, they were at just under 13 billion, in line with the expectation, with some positive currency impact. Let's have a look at the EBITDA first, which improved by approximately 20% compared to last year, mainly driven by better operating performance. Looking forward, a more effective cost control will lead to a further improvement. Then moving to EBITDA. On EBITDA, we beat our latest guidance, achieving an EBITDA of 1.2 billion euros that was up 23% compared to last year. All our sector performed well to achieve this, and our return on sales rose to 9.3%. It's the clearest evidence of the progress in delivering the industrial plan as promised. With the defense electronics business as the main drivers of the growth. Here, the restructuring plan launched in past have brought major improvements, and the positive trend is not over yet. With the further efficiency and industrial processes and process optimization of the cost base. So we are delivering as we planned, and we are confident we can even more progress going forward. Looking at the business helicopters, where slightly increased EBITDA to 558 million and held its margin to an outstanding 12.5% despite the market pressures. Then look at the major step in EBITDA and profitability from defense and security electronic side, Selex and DRS, together doubled both EBITDA to 424 million and the return on sales to 8.1. Aeronautics increased its EBITDA from 237 million to 312, and it increased the return on sales from 7.5 to 10%, with the step up mainly driven by the contribution of the ATR consortium, but also supported by the good profitability of the aircraft division, particularly on the military side, while the aerostructure division still has room for further improvement. Defense system was in line with last year, with the missiles performance offsetting a lower profitability in underwater. Space contributed less than last year due to costs recognized on a specific program that has been put under control, and we expect here a recovery in profitability. And the improving story is not just at the EBITDA level. We also continued steady improvement all way down to our net results. You can see on the slide the strongest starting point with an EBITDA higher at the 1.2, as we said, the further reduction, minus 15% of the below the line items, which is the results of the following dynamics. The slight increase on the non-recurring cost, of which, by the way, the majority is non-cash, mainly due to the settlement of the dispute between Finmeccanica and the Republic of Panama announced on the February 24, that won't have any further impact in the future. Then the further and material reduction of the restructuring cost in line with our expectations, and the impact of the dollar-euro exchange rate has had on our PPA cost. Then the EBIT was 884 million euros. Below that, we have financial expenses down compared to last year. If you take out the almost 50 million euros of cost of the bond buyback, and our tax rate remains low, also taking out the non-taxable gain on the transportation deal. And all these lead to a significant step up in net results before extraordinary transaction from 15 million to 253 million. The cash generation is another key area that's moving in the right direction as per our plan. Overall, we are happy with how in 2015 we have achieved a step up in our FOC, now at 307 million. We are very satisfied with the step up in underlying operating profit, and we did well to streamline the level of investment. But we could be better in the area of working capital, which had its challenges against the backdrop of some tough market conditions. This will certainly be a priority for 2016. Here in the slide, you can look at the composition of our 2015 free operating cash flow and how we expect to look like in 2016. For this year, we see the following three key drivers. First, improving cash from operation, which factors in all the progress at the operating management level of the businesses. Then, a reduction in the dividend received from our JVs, as in 2016, MBDA is not expected to pay dividends because of the increase in its pension deficit. And lastly, our level of investment is steady at the range of 650 million euros, as already mentioned. So we are looking to step up free operating cash flow in 2016 to 400 million euros. So we are heading in the right direction on free operating cash flow. Looking more at some of its components, I just want you to update on the progress we are making in the streamlining the net invested capital. Starting with the working capital. As you know, we have been assuming a decreasing trend in customer advances at an annual rate of around 6% over the next 5 years, let's say. That has been confirmed this year. Therefore, we are working to mitigate this by focusing our effort on all the initiatives aimed to reduce the operating working capital. And although we have been achieving an overall improvement of the working capital net of customer advances, we have done better in some areas than others. And we did face some headwinds coming from tough end market conditions, an example being oil and gas in helicopters. But despite this, and in overall terms, we aim to continue a sustainable downtrend in line with our expectation as a result of the improvement in delivery, procurement, and supply chain management. As you know, last year we set out a 15% reduction target by 2017. So far, we have already achieved some reduction. We know we can do more in some areas, but we are comfortable we can achieve our 2017 target. Then, the second component of the invested capital, the investment. Here we are satisfied with the progress in 2015. Having speeded up the achievement of our target, we have already reduced our investment by 20% compared to 2013, and at the same time, we have brought our depreciation net investment ratio to 1. We have done this without delaying, not even slightly, any of our key R&D programs. Looking forward, we are comfortable with the overall level of investment, and we think it's the right level to sustain the future growth. Let's look forward and talk through our new 2016 guidance. As I said earlier, we are pleased with the positive trend of our core fundamentals. And so we feel comfortable that we can carry the current momentum into 2016. Our 2016 guidance is as follows. For orders, guidance in the range of 12.2, 12.7, improved compared to last year despite persisting pressure on some key markets. For revenue, guidance at the same range, 12.2, 12.7, remembering that 2016 versus 2015, the perimeter change will reduce the revenue by around 400 million. mainly through the sale of the FATA, our engineering company, the two line of business of DRS recently sold, together with the remaining portion of the pass-through activity that will be transferred to Boeing for the 787 program. For profitability, we are targeting an EBITDA in the range of 1,220 and 1,270 million, which means a return on sales of 10%, in line with the target set at the beginning of last year. As already mentioned, we are also aiming for improving free operating cash flow in the range of 300-400 million euros. That will lead to a net debt below 3 billion euro this year. And that's 1 year ahead of our original plan. Looking at the sectors, we expect helicopters to continue its resilient performance, benefiting from its well-diversified customer base and wide range of end uses of its products. Helicopter should achieve 2016 revenue in line with 2015 and a book-to-bill closer to 1. Profitability here will confirm the robust double-digit margins. Electronic defense and security system sector will continue its positive progress with a further improvement in profitability in all its components. DRS Selex will see increasing benefits coming from the industrial processes improvements. DRS will confirm the positive trend in business growth, even in a more competitive environment. And defense system, we also see an improvement. Then aeronautics is expected to improve its profitability, driven by additional efficiency improvement and cost reduction in both the divisions, and space to recover in EBITDA and profitability. So, to wrap up, we are pleased with the 2015 results and the direction and speed of the travel. We are comfortable that we are carrying this into 2016. I will now hand over to Mauro for its final consideration. Thank you.
Thank you, Giampiero. Ladies and gentlemen, you can clearly see behind the results and figures a number of key themes. Benefits of increasing strategic focus on aerospace, defense, and security. Strong delivery of what we promised. Improvement in profitability and cash flow. Better balance between our businesses. Plus, we are carrying the momentum into 2016. Now, I want to show you in more detail how much change we have achieved and the impact it is having on our company. As well as the result, the important thing for me is that we have delivered real underlying changes that make us a higher quality business. Let me explain. Firstly, we have done that by executing the disposals of the transportation and other non-core business areas. That means we have successfully focused on becoming a pure aerospace, defense, and security player. And on top of that, all of our businesses are now contributing to profitability. This is now a more balanced business portfolio, sustainable into the future. So we are more focused and stronger than before. And the key reason of this is the real improvements we have made to our underlying industrial performance, which is thanks to the clear action set out in the industrial plan to improve our key industrial processes, namely engineering, procurement, supply chain, and manufacturing. And at the same time, our new one operating company approach is the tool that is making us more integrated and customer-oriented, and will drive further progress going forward. Many of you were yesterday at our site visit in Vergiate, and I hope you saw not just products and capabilities, which are important in their own right, but also a good example of shared and integrated capabilities from different sectors and divisions, combining to provide winning solutions for our customers. We have achieved a lot of change over the last year, and we are already looking at a very different company. Let me show you what I meant by the balance of the group. This slide that you are looking at shows that 2013 makeup of Finmeccanica in terms of profitability and level of profit contribution of the different companies. In 2013, there was a major drag on our profitability from the heavily loss-making business Ansaldo Breda that we have now disposed of. And at this time, we were heavily dependent on helicopters' performance and contribution, with all the other business being too fragmented and not achieving adequate profitability. Now we have a completely different situation. We are now focused on the core business, and we have a well-balanced business portfolio, which is not reliant on individual sector or end markets. Our EBITDA is more balanced compared to the past, with all the key sectors performing better and contributing to profitability. We remain balanced between civil and military, which provide more resilience against changes in economic cycles, and balanced better our domestic and non-domestic markets. Now, I would like to give you an overview of our business and how we see the outlook. First of all, helicopters. As Giampiero mentioned before, it is a resilient business, diversified and flexible. Despite the challenges in the oil and gas and market, it has been able to achieve good results year-on-year and compared to our peers. You know the situation of our peers. We are the champion at the moment in this sector. Remembering that the oil and gas and market in 2015 contributes just 5% on our helicopters revenues, this is a solid business with profitability expected to remain consistently at double digit. And our objective is sustainability of performance during this tough environment. About electronic defense and security systems. This is the area where, in 2015, we have been able to achieve some really good results, where ongoing restructuring processes and the execution of the initiative launched in the recent past are bearing visible fruits. 30% is now airborne and space system, AI profitability division supported by a good offering and technologically new advanced production portfolio. Land and naval division has strong backlog with growing profitability. Security and information system, where legacy issues have been completely fixed, is expected to achieve growing profitability driven by new contracts and new technologies. And DRS has restored profitability and is now on the right path to continue its improvement. Aeronautics. While we increased EBITDA and profitability last year, there is more we need to achieve here going forward. That is why we changed the management team during the first half of 2015 and created two clearly differentiated divisions, Aerostructures and Aircrafts, to reflect the different trends and objectives, particularly the different characteristics of the two businesses. Aerostructures is a business that is not expected to see volume growth. Therefore, the objective is to drive forward the profitability that has been underpinned so far by ATR. To do this, it is all about manufacturing efficiency. The new management team comes from a very strong manufacturing background, are focused on lean manufacturing and improving the asset utilization. And they have already completed the reorganized how we use our industrial footprint in Italy. Aircraft relies on very effective management of different programs and setting strategies for different platforms. Eurofighter, for example, is a great product. We are improving, where the focus now is on export campaigns, whilst the M346 trainer is an astounding, tough, young product that we can continue to improve further developing our customer support. For example, thinking also a sort of light fighter on the same platform. About space. This area is important to us, and it is part of our core business. This week, we have achieved an important milestone with the launch of ExoMars missions, aimed at seeking life on Mars. As you saw Monday, we play a key role in this program with our integrated capabilities, an example of how we can strengthen our role as a one company. In space, we want to better leader in satellite operations for major European and national programs, expand our service based on high-capacity satellite systems, and exploit opportunities in geoinformation, in new defense and security application and mission support. As you have seen, we are now much stronger and relying on a more balanced and focused business portfolio. We have been able to succeed in this radical transformation also thanks to the actions we put in place last year on the three key industrial processes: engineering, procurement and supply chain, manufacturing. We are satisfied with the visible results achieved so far and the profitability improvement based on the action in these three key industrial processes. And we are much more effective in tackling the industrial performance in delivering better results. I would now like to give you a practical sense of the action put in place and how they are affecting our performance. With one consistent theme: doing more with less resources, or better, doing much more with the same resources. Starting with engineering. Here we have achieved the 10% year-to-year increase in productivity target, with good results across all divisions. As you know, defense electronics is definitively our most engineering-oriented business, and therefore it's the one with the widest exposure to these actions. As an example here, we have been able to insource some core design activities with benefits in terms of control. And the deep review of all the activities has led to a reduction in the engineering costs. Moreover, on the organizational side, in the one company, the engineering has been fully divisionalized, in line with the new operating model, and is now almost entirely deployed into divisions to be much closer to the market needs and to match better the design of the product and system and the industrial process. Moving to this supply chain, Here, the expected savings are in line or in some cases above expectation in all the divisions. At the group level, all the indirect procurement has been centralized and is now managed by Finmeccanica Global Service, which has also enlarged its scope, being responsible for the standard direct procurement as well. And we can increase in the other part of procurement. Looking more closely at the business, aeronautics, being heavily weighted on production activities, has benefited the most from the action on the supply chain. The review of the internal process and the organizations have led to higher efficiency. And the new sourcing strategy and the renegotiation of all the terms and conditions with all the key suppliers is expected to strongly support cost reduction on key product programs, giving us the opportunity to offer to our customers better condition and obviously using and sectorizing all the facilities that we have already, where we have already invested. Further improvements are then expected in 2016, and the new procurement model will be fully implemented towards direct procurement. In manufacturing, as you know, aeronautics is our most significant opportunity to improve our manufacturing processes. And having made the change to management of our structure division, we exit 2015 making more progress than we did during the first half of the last year, thanks to the new management. The focus is on effectiveness, which means timing and deliveries. Further action launched are expected to improve efficiency during 2016. But dealing with the industrial processes is not only about efficiency, but also about strengthening and leveraging integration within one company. All the make or buy strategic decisions on the three industrial processes are now based on the whole perimeter of the one company, encompassing the 7 divisions. If you compare that previous situation, where every company has its own choices about make or buy, is completely different. To give you an idea of how all these actions have already significantly contributed to the improvement of our productivity, I would like to share with you the evolution of the EBITDA per capita. It has more than doubled from 2013 to 2015, with a positive trend that is expected to continue over the next year. Of course, there are still significant differences among the divisions but the improvements are already impressive. On top of this, another key enabler of the change has been the new organization, the division organization, that allows us to have a greater visibility on the business and to better shape them on the customer market's needs. Starting from the 1st of January 2016, we are a one single operating company. It is an important move. What have we done? We have removed legal entities, streamlined the organization, and radically changed the culture of the organization. It is no longer a holding company with autonomous business focused solely on their own agenda. And we have created new roles to improve cross-divisional coordination, including the 4th sector as sitting in corporate center, working closely together and reporting directly to me, setting in the corporate center cross-sector division responsibility in innovation, risk management, business development, that ensure we maximize opportunities for standardization and the leverage of new technologies and best practice, whilst continuing to maximize the scale of the company on our supply chain. What this also does is create a much more effective platform for our commercial strategies with our customers. Using the one company approach, we can propose to customers integrated offers, integrated solutions that respond more effectively to their needs. Take London Naval as an example. In the past, the same customer could have had 3 different interfaces with 3 different businesses without dialogue among them. Going forward, we will be much more customer-oriented, leveraging our sector depths to present a coherent product offering drawn from across our range of products and services. So internally, we are now a one company. We have also showed you yesterday some example of our integrated capabilities. Going forward, we will increasingly be seen also externally as one company, by our customers and our suppliers, by our stakeholders. So, summing up. 2015 was a turning point for Finmeccanica on strategy, on organization, and on financial results. These results reflect another strong year of delivery, and with significant improvements in profit and cash flow generation. We are delivering on the promises we have made, executing strategic change, improving industrial processes, and optimizing costs. And the progress on these challenging objectives that we set ourselves give us confidence to achieve our 2016 guidance. For orders and revenue, both in the range of 12.2 to 12.7 billion euro. For profitability, we are targeting EBITDA in range 1.220 billion, 1.270 billion, meaning gross at around 10%, and EBITDA over 15%. And for free operating cash flow in the range 400 million euro. That will lead to a net debt below the 3 billion euro level. That's 1 year ahead of our original plan that I presented only 12 months ago. We are also confident in the full deployment of the one company and the exploitation of its benefits, and to continue to drive the strategy that is delivering a strong company, creating value for our shareholders, and stability for our people, the workers. As you have seen, we are proposing to the next shareholders meeting to adopt a new brand. At the end of the story, obviously. Why a new brand and why now? Why here? Here is already not clear. Because as you can clearly see from what we have just presented, 2015 marks the end of an era for Finmeccanica, characterized by being a financial holding, managing operating industrial companies in differentiated sectors. With the beginning of 2016, we have ensured satisfactory financial results, all positive and with growing trends. We completed the process of defining and launching the one operating company based on high technology and focused on one clear and unique core business, space, defense, and security. It is therefore the right moment. We have in place everything. We need to establish a new identity. Why Leonardo? Because Leonardo da Vinci, the protagonist of the Renaissance, a golden period in Italy of the renewal of thought for the world, was the first modern scientist, the first modern military engineer, who has been involved in environmental sustainability, space, and defense technology. There is no business in Finmeccanica Leonardo was not interested in. He was motivated by scientific curiosity and the desire to deal unexplored fields. He imagined human flight, design flying machine and helicopters, designed fortification, deepened the study of optics and perspective, studied astronomy and planetary motion, anticipating concepts, technologies and tools that would have been developed in later periods, sometimes centuries, and which represent today our core business. Leonardo also represents the roots of our history. In Italian history of scientific achievement and technological excellence, research applied to all fields of knowledge, arts, architecture, science. At the same time, principles inspiring the works of Leonardo are the basis of Finmeccanica specific industrial path, a great business story which helped to mark the economic and technological development of our country, bringing work and innovation in strategic sectors and establishing solid basis in terms of research and know-how to bring our technological excellence worldwide. Leonardo, it is the brand in which we recognize deep roots, our roots, and the sense of the future, our future. Thank you.